I want to go to Tim Ward. Hi, Tim. How are you?
Good. Thanks for having me on again.
Pleasure. Just before we go on, could you just tell everyone how they can reach you at Ord Oracle?
Yeah, my email is tim@ord-oracle.com. My website's www.ord-oracle.com. So that's how to get a hold of me. Got Twitter account. It's @ord-oracle. So that's how. So should we move on to the markets? See what we're doing?
Yes, please. Okay, you'd like to start where?
Yeah, hope we got this up. This is the SPY, and let me get the drawing tool here.
Should be coming up right now. Let's see, we've got it. Let's see, wait a minute. Do we have it? Tiger TV. I've got mine. Wait a minute. I can see it. I can see it in the Tiger. Yes, we've got everything. Please go ahead.
Okay, so we got it. All right.
Yep.
So I was looking for a pullback. This is the SPY on a daily S&Ps here. And I was looking for a pullback down into the support area between 650 to 640 on the SPY. That's that colored region right here. And today's trend so far is not even panic. Last time I checked, is around 0.7 for the trend. To get in, to have this area 650, 640 to be support, which showed panic in the past. That's the reason why we shaded in light pink. Past panic areas are support areas, and once you go back into a panic area, the trend should actually show panic again. In other words, reading one above 1.2 or higher, and so that hasn't happened yet. But we're not into that region yet, so that region probably will get there soon. Volume will probably be higher than yesterday. That shows some energy to the downside. But I'm looking for a buy signal in the 640, 650 range. The VIX, which is the next window here, was showing it. Only thing bad about the VIX, it just warns you that you're going into a high, but doesn't really tell you exactly where the high is. And that's the flaw of that indicator. The important part is it does give you a warning that you are going into a high. So this is the VIX. This is the SPX VIX ratio in the top window. As you notice, this ratio is making lower highs as the S&P was making higher highs, and right now this ratio is still going down. And finally, the market did pull back. Now it's going into down. So we haven't reached the panic area yet. It's still below us, but this is probably where the buy signal is going to generate, somewhere between 640, 650, and so that's what I'm looking for. So not a lot of downside here. I thought about just going short, but bigger trends up, and I expect new highs to hit before the year is out, and I'm not sure what October is going to go. It could be a trading range here where we hit 640 range, 650 range, bounce up to the current, the previous highs, up around, looks like about, I don't know, 666 area, somewhere up in here, then we come back down again. I'm not sure that's going to happen, but either way, I'm looking for a buy signal in this range, and that so far it looks like it's probably feasible. This goes back to June, shows the other times, the other highs we had. Back to late July, we had a high, and another in the 1st of August, we had a high, and now we got another high. So it's kind of routine. But anyhow, I'm bullish, but we haven't reached the eye areas, the panic area yet. So I'm still neutral on the SPYs, but I'm bullish long term. So I'm looking to get long in this panic area. So we can move on to the gold issues,
Good.
if you want.
Yes, please.
All right. We had wanted to point this out. We're going to jump ahead here a little bit, but on Monday or Tuesday, rather, our last time I was on Tiger Financial News Network, I had a caller come in and ask me why the big spike in volume, and so I looked at a couple of. This is Brock Mining, and this one was AEM. Both of them. This is a weekly time frame. It actually worked on the daily time frame too. But normally when you get these big spikes in volume, where you jump at least 50% compared to the previous highs going into that high. Normally, their exhaust move to the upside. So what I'm kind of looking for here is an exhaustion. Right after that, normally you go into a consolidation. That's when everybody hits the buy signal. That usually stops the market. That's including going down, including going up. So I'm thinking we're heading into a consolidation in here. How big the consolidation is, I think it's going to chew up more time than price. I don't think it's going to be a huge decline. It's kind of hard to say. This last one here in April of 2025 lasted, a month and a half. Mm-hmm. This one may last a month and a half also. So, I think we're heading into a high. And I got more evidence that high may be happening right now. It doesn't take away from the bull market, but the market does go straight up all the time. But I've tried to look for indicators that are working in the current market. We really exploded above 55 all the way to about 75 in a very short period of time. And a lot of those indicators on a shorter time frame just didn't actually were giving bearish signs, but the market continued to push higher. This one has actually worked pretty well over history. This chart goes back to for some reason my drawing tool went away here. There it is. This chart goes back to 2012, and the middle chart is the weekly GDX. And the bottom one is the GDX-GLD ratio, which is the RSI is on. So the weekly RSI of the GDX-GLD ratio, and every time it got above 70, we're at almost 80 right now, 79.7, you get a consolidation. So it doesn't give very many signals. You get one about every couple of years, but the ones that do work pretty well. This one actually kind of gave a double signal. Market kind of still pushed higher off that 2016 low, but we never got above.
Those are the vertical bars, right? The gray vertical bars.
Yeah, this bar right here. If you can see it. Those are all times when the RSI of the weekly GDX-GLD ratio got above 70. So I hear the music.
Yep. So, this is fascinating. Looking forward to the follow-up and the next segment, Tim. So we'll be back with Tim Ward in a moment. We're looking at, I've just got the chart of the AEM up there. Let me just get the chart of the S&P, SPX.X. There we go. S&P is pulling back down 41 at 6,596. And then E-mini that we were looking at right here. Hi folks, Basil Chapman. This is the Tom O'Brien Show. Tommy's away this afternoon. And we're on with Tim Ord. And Tim, what chart next do you want to go to?
Actually, we'll stay this one for just a bit. But I will also point out the bottom window, again, this is the weekly GDX-GLD ratio. And what I want to point out, we're into the ranges of that ratio where previous highs that formed. That's the reason why I put this blue area here. The RSI, which is the blue lines, dotted lines, and I had that shaded area also, which is where the anything above 0.20, we're at actually 0.211 on the ratio, and previous times it got up that high, the market also consolidated. So you got two things going on. You got an RSI above 70, and you got the GDX-GLD ratio in an area where previous highs had formed in the past. So I'm thinking this is just a consolidation. Most likely we'll pull back down to support. Support, the reason why I put this line in here is basically the 2011 highs, comes in around 60. So we're due for consolidation. RSI on the ratios up there, and it's also in the region. So I'm not bearish. It's just the market's actually still picking up momentum, but it's a needed timeout to the upside. So that's why I want to point out that. Let's flip to this. This is I've been showing this chart for the last couple of shows. This is a momentum chart for the advanced decline, which is the bottom window, and a momentum chart for, actually you can't read it here, but this is the up-down volume for GDX. So you got advanced decline, all the stocks inside the ETF of GDX, and the up-down volume for all the stocks inside GDX. And once you get above 40 on both of them, which we actually had twice happen, once in late August, another in mid-September, that's initiation of an up move. So this rally is just beginning on the bigger time frames. Previous times when that was signaled, the market rallied at least 6 months and at a minimum of 3 months. So even though we may consolidate, the consolidation may take a week or two or three, the bigger trend still remains up. So will we hit new highs for the years out? I'm thinking probably. I don't know how long the consolidation could last. Could be a very quick one. But I'm actually, GDX, I want to get back in the market, actually get long GDX, got myself out of that position. Should have flipped long, but I didn't. But I think I could possibly get back maybe close to that 60 range on GDX. And so anyhow, that's what I'm kind of looking for. So you got one short term, you're probably going into consolidation GDX. The bigger trend, according to this chart we're watching right now, suggests an initiation of an up move. So you want to buy the consolidation. So that's what I'd be looking to do. On a short term basis here, this is a kind of a longer term view, or a shorter term view of this chart. So I kind of blew it up. You can see the initiation of both those signals. You got above 40.
Right. On the right of the chart, yes.
Right, where I'm putting the blue part is. So that's both those times you kind of went a little higher. So sometimes you get a mild consolidation, but I think the worst case scenario is basically 60, which is right here. So maybe some there, then back up again. So this bull market's not over yet. It's just a consolidation up with the big spikes in volume on AEM, Barak Mining, and a bunch of others. McMoran, I think, had a big spike in volume also. Those are normally exhaustion moves to the upside, and that warrants the consolidation is about to start. So is it worth shorting? I wouldn't do it. I think the potential pullback could be kind of choppy. Not every day is going to be a down day like uptrends, impulse waves to the upside. They kind of be, down, up, down, up, down, up. But ultimately, I think close to 60 range is where the road or the tire meets the road in that vicinity. So we'll see how that works out. There's a lot of little stocks starting to perform. But like I've been saying over the last, week or so, I think the big ones are kind of exhaustion move to the upside. They're going to need a consolidation. I think that consolidation for these big ones has started. So it's not the time to buy IEM or Brock or McMoran, or there's a bunch of others there in there too. Wheaton, I think, had another big spike in volume. So all of them kind of did. And again, that's just an exhaustion move. So, anyhow, you got questions or anything, or anybody?
So someone asked about silver. Is there a correlation, or you're lumping them together, or silver you're looking at completely separately?
Silver stocks, you mean?
Yes.
Or what?
Well, silver itself, yeah.
Silver itself should outperform gold. That's what normally happens in bull markets. Silver, I have a silver gold ratio that I kind of pay attention to, and I don't have that chart right in front of me, but I still think it's in the buy area. What that implies is that ratio is still in a buy area. That, in other words, silver has not outperformed gold yet. What that does says at some point silver will outperform gold. That's what normally happens in bull markets, and that hadn't happened yet. That implies silver stocks are still cheaper than gold stocks. So, in my opinion, silver stocks right now, if you're doing by valuation, is a place to be. I said in the past on our show that DBS, which is basically a silver stock, still close to its buy area. It's already broke out, started its uptrend, but I think it's got a target anywhere from 8 to 12, which is basically a double from here, if not a triple. Then there's
even higher than the 2014 high at 6. Yeah, wow.
Yeah, that's what the targets are. So we'll see how they work out. I'm not a magician as far as future price goes, but I know how momentum works, and that has a lot of, if you look at the volume charts, even on a monthly time frame on DBS, they're just huge. They're 5-6 times what it was even a year or even a couple of years ago. So there's a lot of interest going in that.
Yeah, the on-balance volume has just screamed to the upside. It's at a high right now. Yeah.
Right. And the stocks, per se, it's moved up, but it hasn't moved up like, Baraka Mining or some of those yet. I think that's still to come. So we'll see how that kind of works out. But I think these smaller ones will actually still keep moving forward because they haven't reached their RSI extremes yet to the upside where a lot of the big ones have. And also you had big spikes in the volumes on the big ones where the little ones haven't done that yet. So probably kind of a quiet period for them, maybe a next month on these gold issues, but bigger trend is definitely up. We're not, it's just, we'll get a shot close to 60. I'll be probably most likely be along GDX. So it's bullish. Equity market looks good. Actually, gold market's going to go along with it. So both markets probably will perform pretty well going into year end, and possibly even next year looks pretty good. So we'll see how that works out.
That's great. Thank you so much, Tim. Tim Ward, folks, Tuesdays and Thursday afternoon, interviewed here. Check him out, Oracle, and I really appreciate that. Have a wonderful weekend, and we will see you on Tuesday.